Our next speaker is Ms. Colette Grosscurt. I hope my pronunciation is correct. She is responsible investment officer at Actiam. And she is part of the sustainability and strategy team where she's responsible for the impact measurement of Actiam's portfolios as well as data and innovation. Prior, she works as an analyst at True Price, where she was responsible for measuring the social and environmental impact of organizations and developing methodologies to internalize externalities. Colette holds a master's degree in business administration from the Rotterdam School of Management. So it's a very different viewpoint. I think financial arrangements are a major challenge if it comes to building with nature solutions that often rely on multiple functions and multiple funding resources. So I'm very anxious to hear, Colette, what's your thought on that, and the floor is yours. Good luck.
Hello everyone, thank you for inviting me. This is a complete new platform actually for me to be at, so I'm very excited actually to share some of the financial world that I'm part of at this point. Starting out with telling you a bit about Actiam actually. Let's see how this works. So I'd like to share a little bit about what Actiam is and then zoom in on how we look at sustainable finance and what are sort of like the key challenges when it comes to the information that we actually need to make an assessment of to what extent a project or a proposal is actually financially and sustainably feasible for us to invest in. So starting out with Actiam, we're an institutional investor. We invest for pension funds, insurers and banks. We call ourselves a sustainable and impact investor because we see that there are different flavors of sustainability in the financial world. You can be responsible, which means having an overlay, a moral or an ethical overlay where you say, I don't want to invest in controversial weapons, I don't want to invest in tobacco, for example. But you can also move up the ladder and say, I want to invest in those companies that are actually showing more sustainable performance. So they're aware of their ESG risks, as we call them, the environmental, social, and governance risks, and they can actually maybe even measure how they perform on these items. And then at the ultimate and we see impact investing, where you can actually see, which is, I think, mainly related to what you guys are doing here with nature-based solutions, where you can see the actual effect on, for example, biodiversity or ecosystem services of certain projects. So we're actually always starting from a global context as we are a global investor as well. And you're probably aware of this trend that we have an increasing world population, which results in scarcity of resources. So we actually really need these type of new solutions that you're creating here to tackle this challenge as well. And we actually identified these as also financially material and very relevant for an investor when looking at future investments that you want to make, because you want to make sure that these risks are not in your portfolio at some point anymore. But that's a challenge. And also another source that states that these risks are coming up and becoming more financially material is the source from the World Economic Forum, where you can see in this graph that actually there's an interesting shift from 2008 to 2018, where you see it used to be all about more financially related risks, whilst now you see a shift going to more climate related, water related, and also cyber attack risks. So these are new topics that we need to be aware of when looking at sustainable financing and when looking at proposals in that regard. Well, given this context, Actiam has set actually 3 main goals, science-based goals, focusing on 3 themes: climate, water, and land. So very much also associated with nature-based solutions, I would say, where we want to aim for 40% reduction in greenhouse gas emissions of our portfolios by 2040. When it comes to water, we want to work on a water-neutral portfolio by 2030. And when it comes to land, we want to work on zero deforestation by 2030. And this is quite challenging because we are quite a mainstream investor. We invest in listed equity, actually. And we have only a small part currently invested in impact investing. So to reach these goals, I think we need more of your kinds of projects to actually show that there's also financially feasible projects that can help solve these goals, actually. And also thereby addressing the sustainable development goals that some of the other speakers have touched upon as well. There are lots of sustainable development goals to be reached, and I think there's lots of interlinkages between all the concepts as well. So this is a question that I'm working on every day. How can we innovate and make sure that we have long-term sustainable returns, which means financially, but also environmentally and socially? So shortly, how do we look at that from an institutional investor point of view? We see that we have several tools in our hands that we can actually use to achieve the goals that we want to achieve. It starts out with this exclusion, where we say we have a moral or an ethical principle, and we do not want to invest in investments that are related to tobacco or related to controversial weapons. Then we move on to voting. We can steer maybe some of the behavior that we see in businesses by voting in a certain way. For example, if we see that some businesses are not do not have their water risks in line with the way we think it should be, we can co-file a shareholder resolution, for example. And hopefully that's been adopted and then companies change their behavior. Then we also engage with companies because we also see potential for change in a lot of companies. And I think some of the nature-based solutions can actually be an example for bigger companies to show this is the way you can move forward actually on a sustainability agenda. And then we also look at ESG criteria. So here the data comes in actually, where we have an ESG score for all our assets, where we say you can score between 0 and 100, depending on how well you do on these aspects. So how well you're doing on environmental performance, do you have policies, do you have strategies to know what your climate change risks are, for example. When it comes to social, do you have policies on human rights in place, these kind of things. And governance, of course, in regards to board structure and remuneration issues. And then finally, we have impact investing, where we are more focused on, for example, microfinance loans to specific projects all over the world, where smallholder farmers are being helped and can actually generate impact in their local communities on all aspects, so on environmental, social, and governance aspects. Then another important thing when looking at new projects or proposals, we also think it's very important to keep in mind which agenda we want to move and within which planetary boundaries we're actually acting. So we want to make sure that investments are not crossing boundaries. We want to actually make sure that this biodiversity boundary that's being crossed at this point already is being reduced, and that there's actually more species that will come about, if possible. And then next to the sort of sustainable perspective, of course, we also have a financial perspective. And this is where I think it becomes very interesting when you look at nature-based solutions, because for an institutional investor, it's a bit difficult to enter a very risky, innovative project. We cannot do that because we don't have the mandate from our clients and from regulatory frameworks that can allow us to do this, because we have very low risk profile that we can enter. And there's only a small portion of the investments for clients that we can actually spend on a bit more risky investments. So you do see a lot of opportunities, for example, in blended finance, where you combine different types of investors that look at risk and return from a different perspective. So you can combine, for example, impact investors with government subsidies to lower the risk overall, and then add on to that institutional investors that can maybe help scaling up. So maybe one other interesting thing is that we also look at green bonds, which is maybe a concept you're familiar with, but it's a concept where a bond is specifically geared towards green projects like a windmill park or windmill generation projects. And then there's lots of trends going on in this market where you see there's a big pickup of green bond issuers, but at the same time a risk that not everyone is claiming the same thing when it comes to what is green. Some think a small portion of making your factory energy efficient is already green, but if that's just a tiny project on the side and it's not integrated into your business model, we think that's an issue, and we want to engage with you and actually make sure that your broader strategy will also move into a more sustainable direction. But I think also when it comes to nature-based solutions, this could be a way to bundle, for example, projects to make them scalable and sizable in a way that they can actually enter a mainstream market. Because I think there's a huge potential and there's a huge financial gap to be filled. Then maybe moving on a little bit from, so this is how we look at projects from a sustainable and financial perspective. Moving on, how do we actually make sure that we're achieving the impact that we want? So we measure the carbon and the water footprint of our investments to the extent possible, given data availability and methodologies out there. But we want to move beyond the paper reality, looking historically towards the future. So how are projects or assets actually prepared for a future that's aligned with a 2-degree or a 1.5-degree scenario, for example? Looking at cost of carbon, but that was also touched upon before, making sure that projects are actually valued in a way that integrates the environmental and the social aspects as well. And that also markets are being created to make sure that this type of analysis will be entering the mainstream analysis from a financial perspective. This is, for example, also something that we're working on, a dashboard that actually shows what is the impact of your investment and to what extent do you actually contribute to the SDGs, for example. Do you know how many jobs you've created with your project? Do you know how many carbon emissions you've avoided? These kind of metrics are very interesting. And I think there's still a lot of challenges in that realm as well, because it was mentioned before as well that biodiversity impact is still in development. We're very excited to be part of a group that's working on biodiversity footprinting. So making sure that ecosystem services and like land use impacts, water use impacts, water pollution, all these impacts are actually captured in a figure. And this is also something that I would advise you to get to know about when you look at your project and want to propose it to an investor, because it's the way the market is moving now. You see that ESG is becoming more mainstream and that sustainable performance will become more mainstream and will be also a differentiator, actually, in the end. So I have a lot of slides, but this is another, I think, my final slide that I would like to end up with, because I think this is also the EcoShape community. It's about sharing knowledge and making sure that all kinds of industries come together to actually solve the challenges that we have when it comes to scaling up these type of projects. We're also working together in a lot of platforms on methodologies, on thinking of new innovative solutions, and maybe we'll meet somewhere there again as well. This is.
Thank you very much, Colette, for a very different perspective on our world and our initiatives. There's room for questions. Did we get a question? We got one by Sarah. You mentioned Actiam would be willing to invest in building with nature projects. How do you see this? Would you invest in specific projects or in EcoShape's partners, for example? Well, that's the question we all are interested in, of course.
Very understandable, yes. Of course, we're very willing to invest. It's always a balancing act because we have to balance between our client demands that have a certain risk-return profile, our own mission, and the demands from the project side. What is especially interesting from an institutional investor perspective is that we want to have at least a certain size before we can actually enter it. So you can think around 200, 300 million euros. loans that we need before we can actually take it as a serious project. And that's why I think this blended finance is a way forward, because you need to test first whether your concept is okay, then you have to scale it up already a little bit, potentially with government money as well. And then if it's proven okay, then we can enter from our perspective. But I think we can also rethink the system a little bit. I would like to challenge you on that as well, because I also think that we have to move away from our traditional way of looking at risk, and maybe find a new financial model around this. But I don't have the answer yet.
Well, you mentioned blended finance. I suppose that means that money comes from different sources, right?
Yeah.
And how in practice, how would it work with the distribution between the different contributors to such blended finance scheme?
Good question. I haven't experienced it in practice yet, and sometimes I think there are different models to think of as well, because you can do it from a temporal perspective, start out with impact investment and then build up, and then make sure, for example, that the impact investor has a certain say in a later stage. But I can also see new models where you can actually agree upon it at the start as a group, and then maybe you can have a distribution at the entrance point already.
Right. Yeah. Okay, that's interesting. There's a next question coming in through the system, which I like. Daniel says, what's the share of sustainable investors compared to all investors? Is it growing? And if so, why?
Good question as well. Yeah, this is a very definitional question as well. What's a sustainable investor? But I do see a growth in this area. It is becoming more mainstream to at least integrate ESG, which is a very risk-related sustainable perspective. So you want to make sure that the companies or the countries that you're invested in do not have certain risks. But it's a very negative impact based one, and not very much looking at the positive SDG contribution agenda. But also in that area, we see growth. We see a lot more impact investing trends, and a lot of investors actually moving in that direction. But I don't have specific numbers on this. No, sorry.
All right. There's also a question from Fokker. There's a question all the way in the back.
Thank you very much, Professor Arninghoff. My name is Gerard Pichel. I was born in Indonesia and then studied in Delft. I was a civil engineer. Now I am retired. And my wife called me every day, you are a civilized engineer. So let me put forward one question. This is very important because the ECB Frankfurt interest rate is about 0%, okay? So if you talk about return on financing, why is that so relevant? Because if I buy a house now, then I will get hypothec with a rent of 3% like that. It's very nice. And maybe we should venture the financial market. For instance, those people who are gambling with money at the aandelenmarkt, Wall Street. It's not the main street, but maybe we can look at them. We can also look at people who are playing, gambling with staatsobligaties, for instance. But also PGGM is very interested in green bond. I think this was not mentioned, and I'm not interested in return on money. I'm interested in return on Sustainable Development Goals target. Thank you very much.
So maybe if I can react to that,
yes,
I think our stance is that both go hand in hand, actually. Also, if you look at a lot of research that has been done on sustainable companies versus unsustainable ones, you see that also their financial performance is actually pretty good. So we really believe that in the long term, the sustainable companies will survive. So from a financial perspective, that's also the better option to choose. So I do agree with you that sustainable development is very important and that it should be key to every decision you make. But I wouldn't say that we should disregard the financial perspective, because people have pensions that need to be paid out. People have insurances that need to be paid out. So it's a balancing act. Thank you.
Very nice. Hans says, can you reverse the argument? In other words, can EcoShape help evaluating or reducing financial risks?
I think for sure. I think there's still a lot of challenges when it comes to this scenario analysis topic, for example, where you see now a pickup on the climate or the carbon emission front, but water or land use, deforestation, the risks that are hidden in supply chains that we don't know yet. I think it can be very helpful if there's anyone out there who can help us with this.
Very good, very good. But this is a nice way indeed to relate your story back to EcoShape practice, so to say. Thanks, Han, for that. And I guess this is the last one. Do you have experience with investments in building with nature type projects? So the ones we just discussed this morning.
Personally, no.
Do you see
And
perspective?
Yes, definitely. Yeah, that's what I was. That's what I mentioned with regards to the goals that we want to achieve. We set them bold as we are, but we don't have a way to go mapped out yet. So I think this is definitely a good solution and a good way to experiment and see whether it can help. Yeah.
Very nice, very nice. I suggest we leave it here. Thank you very much, Colette. Don't forget the tree. There you go. Thanks a lot.